Welcome everybody to this week's Swing Trade Blueprint. Hope you guys are all doing super well. In today's podcast, we are going to be chatting and talking about swing trading. We're going to be talking about some tips, some tricks, some strategies, psychology behind trading and mastering the market. So guys, I hope you guys are all, ready to learn. And for those of you that are new and you're like, who is this random guy? My name is Carter. I'm a full-time trader in the stock market, and I have been for over 6 years, which sounds so crazy to say. And if you want to learn more about swing trading and trading in the market, we do have an amazing school where I teach people my strategies, how I find stocks, psychology, emotions. There's private live streams, quizzes, lectures, everything. If you want to take swing trading to the next level, I highly recommend the school. It's awesome. I don't believe in getting rich quick. I don't believe in alerts. I teach you actually how to trade, which is like so crazy because a lot of traders that have courses and stuff like that, they literally do alerts and stuff like that. I think that is the worst thing any new beginner can do, is sign up for somebody that offers alerts, because you're going to be buying what they're buying only because they're buying it. You're not going to understand anything behind it. So check out our school. It's awesome. You guys can use code YouTube to get 20% off. So I'll see you guys in there, and let's jump into this here. So swing trading. What is swing trading? So swing trading is pretty much, it's short-term trading. So there's really two different ways a lot of traders make money. The first way, I'm sure you've heard of people talking about day trading, is pretty much when you buy a stock and you sell a stock during the same trading day. Day trading is honestly very hard, because you have to be very in tune with the market. It's very hard to do with the job. You have to be very actively involved, looking for opportunity. You're going to be, in most situations, chasing a lot of positions, momentum trading, all that stuff, which is, yes, you can make money off it, but it's a little higher risk, higher reward, in my opinion. Swing trading, on the other hand, is when you buy a position, you hold it for more than a day, less than a year. On average, personally, I hold my swing trades for about 6 to 9 days. There will be times, of course, where I buy a stock today, sell it tomorrow. And there'll be times where I buy a stock and then hold it for a couple of months, like a lot of the positions that we're actually in right now. I plan on holding for a little bit longer. Now, in general, a lot of people don't even know what the stock market is. So the stock market is the marketplace where stocks are bought and sold. I'm sure you've heard of, like the New York Stock Exchange. Those are exchanges. The NASDAQ exchange. Those are pretty much where, brokers have access to buy and sell different stocks. So in simple terms, stocks just represent ownership in a company. And as traders, we really don't care. I mean, you care about the fundamentals, but in simple terms, you more care about the technicals. So the difference between like fundamental analysis and technical analysis is fundamental is looking at like their balance sheet, their cash flow statement, stuff like that, to determine if the stock's overvalued or undervalued. You'll look at a lot of key ratios like EPS, or you'll look at PE, you'll look at debt to equity, stuff like that. Whereas traders, and you're more looking at technical analysis, so you're using indicators like moving average lines, RSI lines, MACD indicators, stuff like that, to determine should you buy this position. Now, more investors, are more fundamentals, and traders are technicals. So I wanted to chat about that, but let's talk about developing a winning mindset as a trader. So when it comes with swing trading, one of the biggest things that I think traders don't do is journal and document. Journaling and documenting your trades is probably one of the best thing any trader can do. And the reason why, one, no matter how good you are, you always remain a student in the stock market, whether you're trading or whether you're investing. And the reason why is the stock market changes every single day. So something you learned, every day you're learning something new, every single day. So having a place where you can documenting it, I use this. This is, for those of you listening, it's called Mastering the Swing. It's a trading journal I made. I'll put it down below for you guys. But why I love it is it has everything you need. Trade performance, your mindset, your trade breakdown, but more importantly, errors and ways to improve. So we never want to make the same mistake twice, and as traders or investors, it's very easy to do so. So having a place where you can document stuff is a very, very easy way to start being consistent in the market. Another thing that I personally do is I am not somebody you'll find buying a stock at 20 cents and trying to sell it for $1,000. No. As a trader, my job, or our job really, I buy a stock at $1 and sell it for $1.10. Now, I try to do that consistently over the year to compound my account. So being consistent is a lot better than trying to swing for the fences. Base hits are better than home runs. Now, with any type of trader, you're going to have losses. You're going to have times where you lose money, which is normal. And honestly, it's I know this sounds crazy, but it's kind of good to have losses. Losses are humbling, and they make you look back at your trades. And if you don't do that, I'm sorry, but that's just not very smart. Making sure when you lose money, it's a learning experience. It's not something you go, oh, well, I lost money, let's move on to tomorrow. No, if you think that way, you're in the wrong headspace. You need to look at and go, okay, I lost $250. This $250 was a lesson. What can I get from it? What can I get from it? Just like a college course costs money. When you lose money trading, it's going to cost lessons. You never, and then you look back at your journal and go, okay, I entered here because of this. Maybe next time I'll try this. So doing that is a very, very easy way to handle your losses good and overall bounce back quicker. Another thing that I want to talk about is being patient and learning. Being patient is probably more important than actually placing your trades. It's always better to trade high quality stocks rather than a bunch of risky companies that are doing terrible, that don't follow your strategy. So one little approach is develop a checklist. Develop a checklist before you buy a stock. Make sure, go through it and go, okay, the stock's doing this. It's on this indicator. It's doing this. Maybe you have, for me, I have about 6 things on my checklist that I make sure follow my strategy. Doing that will help you be patient. It will start seeking out high quality stocks. And then learning, right? Learning, we kind of touched on it a little bit ago, but learning, continuing to invest in yourself. Check out our course code, YouTube 20% off. I know, I got to plug it. But I'll put it down below for you guys. But more importantly, learning. You're always a student. You're always trying to learn as much as you can. And the approach that I have is anybody successful is constantly learning. Look at Elon. Look at these icons out there. They're constantly evolving. They're constantly learning from their mistakes. And I think every trader needs to do that. So now let's talk about a very, very specific strategy and planning for the week. So like I said, as a swing trader, it's very, very easy, honestly, to plan out your week. And the reason why is because nowadays you can set alerts at certain prices, you can set alerts at certain indicators and stuff like that to make sure you're buying when you want to buy and you're selling when you want to sell. So a very simple strategy and checklist that I do, I'll go ahead and tell you guys, and you guys are more than welcome to write it down. But finding a stock on an upward trend is super important. Trends are your friend. And more importantly, imagine like the stock is a river, right? I know it sounds weird, but imagine a stock is a river and you're trying to swim against the stock, against the river. It's going to be hard. And I had the same approach when it comes with trends. So it's always better to find a trend in your direction than trying to bet against the trend. The trend's your friend, and go from there. The next thing is find a stock on support. So for me, I use the daily time frame, and then I find stocks on support. So support could be a certain price indicator or something along those lines where we've gotten tendencies of getting good buying pressure there. Resistance is the complete opposite. So you want to buy on support and sell in on resistance in an ideal world. The next thing is another indicator. It's using the RSI. RSI stands for the Relative Strength Index. It's probably the best, one of the best, I would say, one of the best indicators traders and investors can use because it tracks momentum. Historically, looking back at stocks, anytime a stock falls below a 30, that represents an undervalued point to buy this stock. And I have that down. I have it RSI under 30, making sure it's under 30. The next thing is the earnings. For me, I never hold during earnings. Some traders do. The only time I will is when I'm in a little bit of a longer trade than I will be forced to. But I really don't like to because it's a 50-50 chance of making money. It's very risky to do so, and it's just higher risk tolerance. We don't want to risk too much. The next thing is risk and reward. So with your trades, one of the biggest things is your risk, right? Because you're risking your money on each trade. Now, risk management, people think risk management's making money. No, it's preserving your cash. So in order to do that, you need to have your stop loss set, profit set, and another thing is you want to risk about the ideal situation is about 2 to 3 to 1. So you're risking $1 to make $2. Or $3. Doing that, the higher up you go, the better off you will be because you could be wrong with that type of stock, 2, 3, 4 times and still make money in the long run doing that. The last thing that I have on my list is support on a lower time frame. So support or breakout on a lower time frame is a very easy way to find opportunity, make sure you have confirmation and stuff like that, and check out other videos we have where we talk about other, kind of how that works. I know it sounds confusing, but yeah, it's super, super simple. The last thing I want to talk about here with this strategy and planning part is, it's always important to set goals, but set realistic goals. So setting realistic goals is very, very, very important. And the reason why is because if that's just say you have $100 in your account, don't expect to make $100 every single day or every single week. It's not going to happen. Focus on percentages. It's a lot easier. So try to make 1% a week, right? Doing that is a very simple way to compound your account. And the thing is if you have $100 in your account and you're profitable and you make 1% a week, the only thing that's separating you from making more money and trading full time is just your account size. So as long as you stick with it, stick to the grind, you'll be in the right situation. The last thing, or not the last thing, but a couple other things that I want to talk about here is a couple of common mistakes traders make. The first thing is over trading, where they think they have to be in a position every day to make money. Obviously, that's not the case. Next thing is ignoring your checklist, right? Simple, but traders do it all the time. At least, when I first started, I did. The last thing is just chasing stocks. And what that means is you see other traders online or on TikTok or whatever, maybe in a group you're in, and they enter a position and the stock's already up and, and you think you got to enter. That's called FOMO, fear of missing out. So the biggest thing when it comes with stuff like that is don't chase trends. Trade because you believe in the stock and use that checklist. All right. The last things that I want to talk about here are some resources and some brokers I recommend. Some good resources for trading are going to be Finvest for scanning, Moomoo for a broker, because they offer really, really good tools and insightful information. I'll put them I'll put them down below for you guys. But guys, I hope you guys all enjoyed this little podcast, really explaining swing trading and just getting that ball started, right? If you have any questions, feel free to ask down below, message me on Instagram, or if you want to take that next step, check out our school. You will not regret it, and you guys can use code YouTube to get 20% off. So guys, I hope you guys have an amazing rest of your day. Remember to hit that like button, subscribe, and we'll see you guys in the next one. Take care.